Good morning, everyone, and welcome again to the daily webinar. Today we are 27th of December 2019. Remind you, this webinar is not meant to be financial advice to anyone. This is only an education presentation. Please consider terms and conditions before you continue, and when you receiving this recording. As well, thank God for another end to my life and precious blessings today in Jesus' name. Amen. Okay, we are ready to start a new day, and we'll see how we do with this one. Okay. What am I gonna do here is to check that how we have done it with this one, and there we are. So we start at the beginning of the week with that pound Australia. So all the pound crosses, and we set up over there already. The trigger is over there in pound Australia. Has breakthrough a break even, and actually today I can just put it a little bit over there, and that's it, 300 pips. Hopefully today is Friday, might reach out over there, but at the moment I'm in a break even, which is quite cool. Then we have the pound Canadian. So as we see, this is the same, everything was in a place for there, and pound Canadian has performed breakthrough, came back. Now, this is a place where moving the fractals always help me to at least neutralize my, my thingy, because yeah, I don't want to get into. So that's now my true value. It's quite away, 40 pips from that, but that's, is the risk that I'm taking at the moment with that. Then we did have the pound Swiss, according to our list, from started, and pound Swiss broke that through. Now I'm waiting for this one. I'm still hanging there. So what I'm waiting from this one is if the market breaks below there, then I will move my stop loss. So at the moment, I continue carrying the risk of 124 pips and see what happened after that. Okay. Um, then we have the pound New Zealand. So everything was in place. Pound New Zealand um, did there. So break even. So that's now, now you see it breaks from there. So now I can move my stop loss. So that's a very cool way to, to the, for example, here, if I would be in that trade, as soon as I have that, this is where, minimize my stop. Always is a good idea to do that way. All right. Um, then we have that pound US, beautiful resistant level, resistant. So pound US, there you are. Broke through, came back, and I'm still in this one because this is where the breakthrough. So that's still over there. So the same. So if it breaks from there, there it is. Otherwise, that would be my stop. And that's a good mechanical way of holding your positions through the fractals. Beautiful third touch with a weekly setup over here, pound yen. And see how I do. Pound yen, it just broke up. I put it actually in the daily because the 4 hours, yeah, that's when exactly breaks. And at the moment we got a break from here, so I'm entitled maybe to put it over there, somewhere over there. So my risk is very, so that's a good way. Once the market breaks over there, this become a true support resistance where you're not giving more than that. So that's what it is, and that's what now, the main thing is save our entry, and after that just leaving as the market is given to us to do it. And the last one was the Euro Australia with a beautiful setup over there, and ready to break from here. And that it is, oh, that was the Euro Australia. So the pound yen is this one. Okay, so yes, we when we jump into the room. So that's that's the break. So I'm waiting for that. As you see, holding my stop where it's supposed to be. If that's the break, that's my there. Look how much the market has come back, and I'm not moving until if tonight we got over here. Otherwise, I wouldn't get a big hit of 138 pips. And never mind, as it is 300 pips over here, and we'll see what happened through that. And that's it. So that's the weekly candle close. Once a week, we start Monday, become Friday. Look over there, go around. Ain't nothing more that we can do about over there. So there we are. Now there are two different ways that we can look at a weekly candle close. This is New Zealand Swiss. So let's look something. Let's look something that we normally do not observe. So we keep with because these things I know by memory at the moment. I don't need this Euro SIC. There it is, Euro SIC. There are two different ways to, not two, more than two ways, how to approach, excuse me. What is my tablets? My tablets. Oh, there you are. I got a brand new 3 packets of these ones open here, it says. And these are like a medicine to me. Oh, actually, talking about medicine, I need my tablet. That's better. Okay. So first of all, we pick a currency. Okay, so you know how to pick a currency. We can look at it's very easy. You want in pips, mostly currency pip move. Let's have a look here. No, this is no this one. I was pip moving. How to use a pip move the FX. Let's have a look here. So come on. The intent's a bit slow. So there we are. So we're looking at Euro US, New York, Tokyo, and London. So look at the London, it has the most pips moves, the pound same, Euro yen, London. Well, it's mainly looking in London as well, New York. So we look in Tokyo. Normally, it's Tokyo, and in Australia, the PIP move is only maybe related with the Australia. So when we're looking like that, we can know our stops, we can know our targets. So you cannot expect the 300 pips move this base it and this one like that, but you can expect it with this guys. If one day moves like that, uh, this is where yeah, the pip bump. So judging by this one, let's look. I wanted something cool, not too hard volatile. Maybe a 50 pips a stop loss, and this one would be nice. 40, 30 even. This one 20, 10. This the lowest one. Now spread wise, this is definitely will be always the spread wise more inclined to have this one. The exotics normally you pay more spread for it, but anyway. So Euro yen, it looks to me the one that actually through the whole entire setup is going by there. So if we look in the Euro yen, and there we are with the Euro yen here. Now that's the weekly, this is the daily. So as I say, you pick something that it moves, and once you pick that something that moves, you have two options to trade. You can trade the weekly candle close strategy. So you're just moving according to the weekly. So this weekly saying to go short, that's the short, and that's the stop loss, and that's it. Whatever there. So this is plainly on the weekly, looking for entry over there, looking for entry from here, And so, so there, here we have another beautiful there. There, the first week, as you see, is the first week that you need to always get into touch. And right over here is the entry. Right over there is the entry. Oh, sorry. Right over there is the entry. With no hesitation of that. That's the first week, and the pips always will be there. Let's see, that would be my first week. 2 weeks up, 1 week down, and that it is. And if we follow just the fractal along, you get those pips that we're looking for. I mean, and this is on daily, so you only come once a day. So that's the first. Sorry, that's the first week. So we're looking over there, short run. That's the first week, short run. That's the first week. Didn't go too far. That's the first week. So sometimes you're gonna have good runs. Yeah. And this is looking the simplicity of the first weekly candle close indicator. Now we have picked this currency, to trade only this currency alone. What about if we looking for the index meter to help us when this currency, it has, good time. So, in other words, we want the euro yen trade, but we want when things are actually on the same road. For example, here, this one has dropped, this one is still strong. So that means that the euro is weak and the yen is still strong. So therefore, the euro yen and the 19th of August, we're looking over there, that was September, July, August, 19th of August is somewhere over here. Is telling me that very simplicity here, that the euro is weak, the yen is strong, so therefore I'm looking to go short. And there it is. The market did go in direction. Here is not the first week, so we're looking is the first week. Unfortunately, we cannot go any more far than that, and that's it. So, and here we continue looking. This week is nothing. This week maybe nothing. This week is nothing, but maybe this week we have on the 16th of September, we have some kind of the euro has recovered, and the yen actually, even from here, the yen has collapsed. This one is coming down, coming down, coming down, but this one has a huge move. So the night of the night, we can have a look and see what happened on that weekly candle close on the night of the night. And there we are, the night of the night, and we got the surprise. All right, so we see it. The euro maybe did not present us with a divergent. On here, only move 1 pip, but this one has moved 1, 2, 3, 4, 5 pip, 5 points down. You know, um, against that. So that's mean that this guy is in a row, and that it is a small move. That's what normally happen, and that's it. Then we look in here, we look in there, and that moment we see in the 23rd, one go up, one going down. At that moment, nothing. We don't know what's gonna happen next. We look in the euro yen to go long, and what we see over there, and the euro yen, which it was, I forgot now, 23rd of September. So that's the 23rd, and there is no long. Look, that one there. So there is no sign to be long with that one there. And of course, one went down, the other one went up. So now the euro that week is going down and the yen is going up. So now we're looking to go short on the following week, in which is that week. And now I don't like the second week. So, but still, maybe, I don't know, break even, no big deal. That's for some time. That is there. This week both go together, but this week something has happened, and so this week is not. But then the 14th of October, we see a divergence. So we're coming over here, and we say the 14th of October is there, and it's clear as the water we got a move over here. And then after that, the market. So using the weekly candle close direction with the index meter actually can be two very powerful combines. We want to be looking something that it moves. Now you decided here, are you want to be, in the big moves? You want to be Australia will give you, I believe with Australia, if I get 50 pips move, 40 or 50% off and the rest whatever, that's a good target. Here, yes, 100 will be excellent, but this 150, I think that will be quite good um, there. So that's a good way, to get that Euro US 68, 68, 68. I used to have a list that I can see potential whichever move are worth day trading. Doesn't say Euro US daily 105, 80, 128, the pound, of course, Euro yen still back again, 121. You see Canadian, why, we can leave Canadian away. The Swiss surprise for that is 151 pound yen. So this is the pairs that actually, are worth trading, the moves. And we can use that index meter, and then you have, just one simple way of trading in that direction alone. We look in the Australian yen, the same thing. We come in over here, and it will be the moves will be normally the same as well. Um, if we just change it to the Australia yen, and here as well, the 14th of October. We're looking at clear recovery from the 7 to the 14, the 7 to the 14, come down. So the 14th of October is over there, and look, there is no bad run for anyone, that interesting over there. That's the 4 hours. We can get an entry over here, a stop loss over there, and we can get a target as well. Break even, everything is in place, and that is our target over here. Right, spot on with everything that we think that can be um, can be done over there from there. All right. So yeah, so that's really, the first one is just simple like that. You know, get this one, the weekly candle close with the index meter always will give you the right time, when to do these kind of trades. So for example, here, 18th of November, and if we're looking over there, I'm sure it is there. Um, Somewhere there. And the candle was a bit, not closing properly. That it is. So anyway, so that's one way that we can be looking the trading. The other way that you can actually just set up everything is always looking the shopping levels. Now we say that horizontal shopping levels is one of the most powerful shopping levels at all. When the market is coming down, there are two things that you always going to be looking is the lows and the highs of the market. When these things happen, you need to have an eye always for the low and the high. And this has to be always there. The lows, the rejection points is helping us to identify these, the highs, the lows and the highs. Okay, the highs and the lows in this case, the highs and the lows in this case. And by looking that way, with the market, and the weekly time frame, especially the pound US has an incredible um, sort of kind of directions to work towards that. So that's my high, for example. I'm going to be waiting for there. That's my low over there. That's there. And from those points, really is matter of waiting what the market is doing over here, so there and there. And here, when the market is doing like that, we're trading one day of the week. But look, one single thing, how much it can help us to identify when or what week to trade from here to there. And on and on and on and on and on. Okay. So shopping levels, horizontal levels, always going to be a very good way of trading there. Now, as well, here I didn't mark the rejection, but this is a rejection point over there. If we're looking over there, that's a clear rejection point. And so what I'm going to be looking is these highs and lows and wait for that week over here. Now, in this week, I want to be looking what is happening from there. I'm in a key level, and that's all I know over here. That's another there, and that week over here. So we got the opportunity set up, and there we are. We're looking from there. We're looking over here. Maybe we got a loss. Uh, but there now is a different story as the market is, support is using resistance. So horizontal levels are very powerful with the weekly candle close. And then we look in the index meter as well. If it is with us over there and that we are into that. So we're looking over there. We're looking, that is definitely, I would be looking right over here, and normally it's one more day there, and that's the beginning of the week, and then the market just went. So but the next week we got that, and we got this one over here in beautiful setup, which is normally that one there, um, there, and the market there, and there it is. So between the winners and the losses, we got here, we got that one over here, didn't work. We got that one over here, didn't work. We got that one possible over there and didn't work. So we always looking above those levels, below those levels, and so on. So we got there, market comes, base, and pull back, and that it is. So there is some, just by looking one single um, line like this one, it can be very, very profitable when you look in something like that and you have a weekly like this. This is when the weekly candle close really can help us to do trades like this. Index meet at it again, and that's it. So no problem there as well. And then sometimes we're gonna have big moves, sometimes we don't, but there they are. These rejection points are vital into that. And when we got those moves over here, that's what, with this one, I like with the weekly candle close, the first weekly, because here you don't want anything else. You just put the tray and toss the coin, and that's it. And you never know when. And that's resistant, resistant, resistant comes over there. That is support, 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 maybe there, and there it is. And of course, the index meter once a week, set a trade, and have life. All right, my friends. So that will be for today. To see you tomorrow morning, same time, same place. Not tomorrow. Tomorrow is Saturday. Monday morning, we'll have the webinar waiting for the weekly candle close. See how this finished today, and that's all. Okay. Take care of yourself. Cheers and bye.